Michael Burry, the billionaire investor who rose to fame for correctly anticipating the 2008 housing collapse, now seems to be shifting his attention toward the artificial intelligence sector, and more specifically, toward betting against Palantir Technologies. Burry, who became a household name for his daring and profitable trades against the United States housing market before the crash that sparked the Great Recession, has built a reputation for spotting speculative bubbles long before most investors see them. His latest move has therefore caught the attention of analysts and everyday investors alike, as it could signal that one of the most well-known contrarian investors on Wall Street sees danger ahead for artificial intelligence stocks. According to Scion Asset Management's most recent quarterly 13F filing, which was made public this week, Burry's fund has taken sizable put option positions on two of the biggest names in the artificial intelligence world, Nvidia and Palantir. A put option is a financial contract that allows its holder to sell a stock at a fixed price before a set date, meaning that if the stock price falls, the value of the option rises. Essentially, it is a way to bet that a company's stock will decline in value. The filing revealed that Scion Asset Management now controls the right to sell 5 million shares of Palantir and 1 million shares of Nvidia. At the time the filing was made, the combined value of these holdings came to just under $1.1 billion. However, the filing did not provide information on when these put options expire, so investors cannot yet tell whether Burry intends to hold these positions for a long period or if they are short-term trades meant to take advantage of immediate price fluctuations. It is important to understand that quarterly 13F filings only offer a snapshot of what an investment firm was holding at the end of a specific quarter, not necessarily what it holds today. That means Burry's positions could already be different from what was reported. The third quarter ended in September, so several weeks have passed since then, giving him plenty of time to make adjustments. Nevertheless, his name appearing in connection with large put positions on two leading artificial intelligence companies has already stirred considerable debate about whether this could be an early warning sign for the broader artificial intelligence sector. Palantir's chief executive officer Alex Karp did not stay silent on the matter. During a Tuesday interview with CNBC, Karp strongly dismissed the idea of betting against Palantir or Nvidia, calling such a move completely irrational. He described the notion as something that only someone who does not understand the market would attempt, emphasizing that both companies are among the few actually making substantial profits within the artificial intelligence space. According to Karp, those who are shorting Palantir, including well-known figures like Michael Burry, may be participating in what he believes could qualify as market manipulation. His comments drew plenty of attention because they came at a time when many investors are still trying to determine whether the explosive rise of artificial intelligence stocks over the past year is truly sustainable or merely a temporary speculative surge. Interestingly, Michael Burry himself has been sending mixed messages about his stance on artificial intelligence through his social media activity. In one of his posts from last week, he shared an image of his character from the 2015 movie The Big Short, which dramatized his famous housing market bet, along with a cryptic message that read, "Sometimes we see bubbles. Sometimes there is something to do about it. Sometimes the only winning move is not to play." This message seemed to hint that he believes there could be a bubble forming within the artificial intelligence sector, though it was left open to interpretation. Many of his followers saw it as a subtle indication that he views the current excitement surrounding artificial intelligence as overly hyped and potentially risky. A few days later, on Monday, Burry posted a new series of charts that added further context to his thinking. The charts showed that growth in cloud computing for large technology firms such as Amazon, Alphabet, and Microsoft had actually been stronger before the current artificial intelligence craze began. He appeared to be pointing out that despite all the excitement around artificial intelligence, it may not yet be driving the kind of real, sustainable revenue growth that would justify the enormous sums being invested. Burry also compared today's environment to the dot-com era, when investors threw money at internet companies that had little to no profit, ultimately leading to one of the largest stock market crashes in history. He suggested that the modern artificial intelligence market is showing similar signs of circular financing, where companies are investing in one another in ways that could inflate valuations without generating actual economic value. Then, after news reports about Scion's latest filing began to circulate on Tuesday morning, Burry responded online in his typical sardonic style. He wrote, "Fake news. I am not 5 feet 6 inches," alongside a picture of himself with actor Christian Bale, who portrayed him in The Big Short. Many interpreted interpreted this as a lighthearted attempt to deflect attention or poke fun at the idea that he was short on artificial intelligence stocks. He also wrote that no journalists are more fake than those reporting on 13F filings, implying that the media often misinterprets these routine disclosures. Scion Asset Management, for its part, has not provided any official clarification regarding Burry's actual investment stance or the reasoning behind these specific put options. While Michael Burry's moves have drawn widespread curiosity, he is not the only one raising concerns about the state of the artificial intelligence market. Some analysts and experienced investors have been voicing warnings that the sector might be entering bubble territory, much like what happened during the late 1990s when internet stocks soared to unsustainable levels before collapsing. One major point of concern is the complex and somewhat self-reinforcing nature of artificial intelligence financing. For instance, companies such as Nvidia not only produce the hardware and chips that power artificial intelligence systems, but also invest in and supply companies that build artificial intelligence software. In some cases, these same companies become Nvidia's customers, creating an investment loop that may artificially inflate valuations across the entire ecosystem. Another source of skepticism involves the massive costs associated with artificial intelligence infrastructure. Running advanced artificial intelligence models requires enormous computing power, which in turn demands vast data centers and specialized chips. Constructing and maintaining these facilities is extraordinarily expensive. Some market experts question whether technology giants will be able to generate enough profit from artificial intelligence applications to justify these colossal expenditures. If revenue growth does not keep up with the spending, it could eventually trigger a pullback in investor enthusiasm and lead to a sharp correction in valuations. To put this into perspective, the artificial intelligence boom has fueled a massive rally in several technology stocks over the past year, with companies like Nvidia becoming some of the most valuable corporations in the world. However, such rapid gains have historically been followed by sharp declines when expectations become detached from real-world earnings. That is why Burry's move, whether it represents a genuine bet against artificial intelligence or just a hedge against overexposure, has captured so much attention. He has a track record of making bold, unpopular calls that later turn out to be correct, which makes investors more likely to take his latest actions seriously. If the artificial intelligence market were to experience a slowdown or a correction, it could have ripple effects across the entire technology sector and even the broader stock market. Many institutional investors, hedge funds, and retail traders have heavily concentrated their holdings in artificial intelligence-related stocks. Therefore, a significant decline could lead to widespread portfolio losses and reduced investor confidence. On the other hand, if the artificial intelligence industry continues to grow and generate real profits, then Burry's position could end up being a costly miscalculation. In the end, only time will reveal whether Michael Burry's bearish stance on artificial intelligence companies like Palantir and Nvidia is another brilliant foresight or a rare misstep. Regardless of the outcome, his involvement alone has reignited a vital discussion about the sustainability of the artificial intelligence investment boom and whether the current enthusiasm is grounded in reality or simply another bubble waiting to burst. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.